What's the difference between a stop market and a stop limit order? Overall, these are stop losses. This is when price goes against you, whether you're long or short. It is a stop order to close your trade. This means that you lost money. This is your protection. I always recommend using a stop order, but I personally don't recommend using stop limit orders. Now, a stop market order, if you were to think about this, is you buy at 100, you put your stop market order at 98. If price gets to 98, then that triggers a market exit. So that means whatever either at the bid or the ask, whatever it is, you're getting out now. You're not specifying a specific price, which is the important piece. The way that it works is you're saying, get me out now. So you could theoretically lose a little bit more money than you would have wanted, depending on how fast the move down against you is. So if there is major news and it hits 98, which is your stop market order, and then let's just say it flushes down to 96, maybe you get filled at your exit at maybe 97.50 or 97.75 or whatever it is, but you got out, right? So you lost a little bit more money, but you definitely got out because you're guaranteed to get out. I mean, you're not guaranteed to get out, but there's a very, very high likelihood, like 99.9% of the time, you're going to get out of that trade using a stop market order. Now, a stop limit order, using that same example, you enter at 100, you put your stop limit at 98. Now, the benefit of using a stop limit order is that you are specifying the price that you want to get out at. So you say, I want to get out at 98 or better, but I'm not getting out at anything less than 98. Now, the reason that that's a little bit sketchy and a little bit scary sometimes is if there is a strong catalyst or if there's some news headline, whatever it is, price flushes through your order. So it goes to 98 and immediately goes to 97. You're just going to have your order there hoping that price is going to come back up to touch your order because it will trigger a limit order at that price, which is a little bit sketchy. Honestly, because if it does flush, then you need to cancel the order, you need to place a new one, and you might lose a lot more money than you wanted to. If something is very liquid, you might not have a problem with it, but something that moves very quickly, you might end up losing more money than you wanted to. My personal recommendation is use stop market orders. You could lose a little bit more money but there is a practical guarantee that you're going to get out of your position in the area that you wanted to. But if you use a limit order, you might not get filled, and that is a problem if price just goes straight way against you. If you guys have any questions, please leave a comment. Appreciate you guys. Subscribe to the YouTube.